Hi, welcome to Numerics Video Blog. I'm your host, Jim Jockel. Today's discussion kicks off a new series of blogs where we'll be providing global territory analysis that examines derivatives pricing and risk management topics impacting specific regional markets. Today we have Cor Anderson based in Helsinki to discuss what's driving demand in pricing and risk analytics technology throughout the entire Nordics. Cor, as we prepared for this segment, we had a really interesting discussion around XVA. So I'd like to kind of start there. And how is XVA being understood by the banks currently? How are banks in the region really starting to think about it?
Banks are, of course, in the process of implementing, and especially the larger banks have already come pretty far. What I would call the tier 2 and regional banks are in the process of implementing, finding the right solutions. I think they see, my general impression is that they see an opportunity not only for meeting regulatory requirements, but also for increasing profits through optimization of their balance sheets through using the XVA numbers.
Yes, looking at the optimization, but how is it starting to translate into the front office? Are we starting to see more of the traders engaging with these types of calculations?
Absolutely. Several banks have already introduced specific XVA desks. So definitely we are seeing focus on XVA in these banks, and they are producing the numbers, or some of them are producing the numbers and looking into how they can utilize them, and of course in some cases try to pass on the value adjustments to clients and trading partners.
So, being further along in terms of the implementation of, and just the theoretic understanding of the calculations themselves, what have been some of the challenges in terms of the implementation and the rollout, throughout the institutions?
Surely, there's still challenges there, and I believe that will continue for a while, as not everything is carved in stone. There's still various methods out there being discussed, and we see that these banks are trying various ways to see what they get out of it.
Talking about the market opportunity, so clearly with the implementation of XVA, obviously better understanding of total cost and managing costs through the process, but also we have an interesting time in the market right now, especially throughout the Eurozone with Greece and the collective negative rate environment. What has been the impact of negative rates as it relates to the Nordics?
Oh, negative rates have absolutely had a very big impact. We've seen several counterparts or several banks putting a lot of focus on to how to optimize their balance sheet given the negative rates, and I believe that's this process that's still going on, and as we see short-term rates and even medium-term rates turning lower and lower, this process will be going on for a while.
Now, the Nordics also have traditionally been very, very engaged with complex structured products. Have you seen a shift in the distribution of new product types balancing against negative rates, or a pickup in demand for new innovation?
There's no doubt about that. The low interest rate environment has forced investors, especially on the retail side, into alternative products, and utilizing structured products has increased in the last years, as that has been the only way to get a decent return on investments. We see at the moment increased demand through what I would call distributors, basically small boutiques, financial institutions that are distributing structured products throughout a network of private bankers to retail clients, and there through, of course, increase in demand for pricing capabilities of advanced structures.
So one of the things that we've seen, especially in the EU with new regulatory regimes, is starting to look at the introduction of projections as it relates to explaining different products and structured products. Do you see that as a near-term trend that's continuing, given the dynamic elements of the structured products within the Nordics?
I think so, yeah. And of course, also we see that the regulators are getting more and more focused on how to regulate this market, which is to a large extent actually unregulated at the moment. Again, the regulators are focused on protecting the retail investors, the private consumer or the consumers, and but at the moment the market is actually largely unregulated. But I believe that we are going to see more regulation coming in on that front, simply to protect the consumers.
So to that end, so now we're in Q3 of 2015. You know, it's a race to the end of the year. If I'm a risk manager in the territory, what's my priority list that I'm thinking about as we close out the year?
I think definitely capturing the effects of negative rates. XVA is driving forces within risk management, and yeah, in general, keeping a solid balance sheet.
Well, thank you very much, Corey. I really appreciate your insights into the territory, and clearly, as you know, we continue to see involvement within the Eurozone. We'll definitely keep an eye on structured products, the issuance and change in product mix. And of course, we want to talk about all of the topics that you want to talk about, so please feel free to engage with us on LinkedIn or on Twitter at NX Analytics. Again, I'm your host, Jim Jockle. Thanks for joining.